Interest and dividend income. We're going to be looking at your Schedule B in your 1040 tax returns. We're going to look at the last 2 years to confirm that you've received this income over the last couple of years. We're also going to ask for the statements of the bank accounts that are producing this income. So for example, if on your tax returns it says that your Merrill Lynch account is producing X dollar figure in interest and dividends, then we're going to look at your Merrill Lynch statement, and each one line by line. We're not just looking at a total at the bottom. The reason that we need the statements is because we need to verify that you still have the asset, right? That you haven't spent it. And naturally, you can't use that asset as a down payment and also count the interest that it's been giving you in the past as income. It's one or the other. What about capital gains? Can you count that for income? Sometimes. We can count capital gains as income if we can prove that it's going to continue. So we'll look at your previous tax returns, and let's say you had a property, you sold that property, we see the capital gains income on your tax return, and you don't own any other properties that you're going to sell. Then no, we can't count that as income because it's not going to continue. However, if you have a real estate portfolio with many, many houses, and we can see that last year you sold a house, the year before that you sold a house, and you've got another 10 properties and you can keep selling a house a year, then yes, we can count that as capital gain income. That can be qualifying income towards your purchase. This same philosophy also applies to capital gains you might have received on stock or any other asset. We need to show that it will continue in the future and that it wasn't just a one-time event. How about trust income? Can you count trust income to qualify for buying a house? The answer is usually yes. Yes, you can. We will ask for a copy of the trust or the trustee letter, just some documentation that shows the amount, the duration, and the frequency of the payments that you are receiving. We're also going to look at where that money is coming from. So if there is a property that is in the trust and you're receiving income as a result of that property, then we assume that property is just going to stay spitting off income. If the trust is holding an asset that is a bank account and that money is what's creating the income, then we're also going to need a copy of that statement to show that there's enough money in the account to continue providing the same amount of income for at least 3 years. So depending on the kind of trust you have and what's in the trust, that is what will dictate the exact documentation needed. Quick tip on the documentation piece while we're on that topic. If the bank statement says 100 pages, it's page 1 of 100, we need the whole darn thing. And we understand that the portion of the statement that is most relevant to you might be pages 25 through 37, and the instinct is to just send us those pages. Unfortunately, we need the whole darn thing. So just accept that up front and send us the whole thing. It'll cut out a lot of back and forth. Royalty income. Let's say you wrote a book, you wrote a song, and you're getting some royalty income on that. Wondering if we can count that as qualifying income towards a mortgage? Well, like a lot of these, the answer is maybe. We're going to need to see a copy of the contract or the agreement that outlines the terms of that royalty income. We're going to need to see that you received the royalty income on your previous tax return and proof of receipt over the last 12 months into your bank account, seeing that you are indeed receiving that royalty income. We'll also need to make sure that it will continue for the next 3 years. So if on the contract, we see that that income will stop in 6 months or anything less than 3 years, then we cannot count the income towards qualifying for your new home. If it will continue, then yes, that is qualifying income. What about notes receivable? You might be like, well, what's a notes receivable? That's when, if you were to lend your friend, say $100,000, they need the money, you're like, I got you. And you come up with an agreement and your friend is paying you back every month, then you are the holder of that note. Note is another word for a contract around a debt. And you are the one receiving it. So that's why we call it notes receivable. In that instance, we will need to prove that you have received payment on this note for the last 12 months and that you will continue to receive payments for the next 3 years. So if that debt is about to be paid off and your friend won't be making you payments anymore and it's going to get paid off in 6 months, then we cannot count it as income. Naturally, we will also need to see a copy of the actual note of the agreement. So it can be counted oftentimes. Let's look at temporary leave. Maybe you're on parental leave or short-term disability, and you have a date that you're going to return to work, but you're looking at buying a house now. Oftentimes the question comes up of, can we use the parental leave income and what do we use for qualifying? Here it is. We will get confirmation both from you and your employer on what date you are going to return to work. If your return to work date is before your first mortgage payment, then we can just count your regular salary. Just there you are, your regular salary. The fact that you're on temporary leave right now does not impact your qualifying. Now, if your return to work date is after your mortgage payments start up, that's when we're going to have to qualify you on your temporary leave income, because that is what you are earning now. If you're in this category of going back to work after your first mortgage payment, we can also look at the assets that you have in the bank and calculate if you were to use those assets to help with your daily expenses between the time of closing on the house, or rather between your first mortgage payment and the time that you return to work, those assets can help you make it through those months. We can count that as income as well. We'll look at it, divide by the number of months. That's only possible in this instance. So please don't think that that can be applied to other times, but there's a little bit of common sense on this one, which I super appreciate. In short, we're going to have to look at all the dates and figure out what's possible. There you have it. All the various income types and what we can count and what we can't count and basics on how it's calculated. If there is an income type that we did not cover in this video, please reach out. Let's talk about it. I will pull up the guidelines, talk about what program you're really looking at, and see how that income might be used as qualifying for your new home purchase.